Alright. Welcome guys, welcome. Hey Joel, what's up? Hey, 4 likes already, whoa! We didn't even begin the live stream. Welcome guys. So I spent a good part of my day today really just adjusting the mic and making sure everything sounds a lot better. So hopefully you guys can hear my efforts on making the quality of the audio a lot better using my very nice mic, and also the quality of the overall screen, the display as well. So hopefully that will pay off. But if you guys can hear this audio change, make sure you guys leave a thumbs up down below. But overall, yeah, if you guys have sensitive hearing, you guys can clearly hear the difference or the change, please let me know by liking the this live stream. But yeah. Okay, so we have a few things to discuss today. So as you guys can clearly read from the title and obviously in the description box below, right? We're gonna go over SEMIS, right? SEMIS and specifically ARM Holdings Group, right? So if you guys haven't read the description box, I would highly recommend you guys do that. But we're going to be going over SEMIS, commodities, and the overall market and what we should be anticipating for Q2. And also, by the end of this live, I'm going to be giving you guys a free trade idea, a swing trade idea. So make sure you guys stick around. But with that, yeah, I think that's kind of goes... Well, that does gives us a good summary of the objectives that we're going to go over. So let's first start off with SEMIS. So let's take a look at SMH, right? This is the semiconductor ETF. And so far, it's been kind of, well, it has stopped its uptrend, right? And currently, it looks like we're making a new lower high. Now, the reason why I'm saying it looks like is because we aren't seeing an official lower low yet, right? Because if you guys didn't know, all right, so here we have our all-time high at 239.14, and then we have our most recent lower low sitting right here at $212.82, $212.82. So we have designated our first pivot high point and our first lower low point. And this may or may not be our second lower high point. And the reason for that is that, well, we need to see a lower low point, a second lower low point compared to this one. All right, so we haven't seen that yet. So it'll be too early to call this current high here, the second pivot high point at $230.05, our second lower high. So again, it's basically this pattern here that I'm kind of describing, right? So this is the general price path of a downtrend, a very textbook downtrend. All right, so this is exactly what you guys should understand, right, and comprehend here. And if we do break below 212.82, then for sure this will become, on this daily candlestick, will be the second lower high pivot point, right, compared to the first one. So again, semiconductors today overall, well, this entire week and even last week, we've barely moved from last week's range, right? We're still stuck between the range that we made on Monday all the way up to Friday of last week. So now, today, let's see what happened today. Right? Hey, what's up, guys? Whoa, a lot more people are joining in now. Welcome, guys. Welcome. If you guys have not liked the live yet, make sure you guys do that. If you guys have noticed the overall quality of the live, including the audio and including the visual screen here that you guys are looking at, make sure you guys leave a like down below if you have noticed that. It's really appreciated because it took a few hours to really get everything down. But hopefully, again, it just increases the quality of these weekly Tuesdays and Thursdays live streams. All right. So, with SMH here, like I said, if we were to follow this textbook downtrend where we officially make another lower low, confirming this second pivot high point, well, there is an opportunity at hand here, right? And we can definitely look to short SMH since, well, just based on the weekly time frame. And if I take out all my technical analysis, it's a bit overextended, right? And as I've been saying for, I don't know how many weeks, how many months since this year started, well, two months basically, I've been telling you guys that if we were to see a market rollover to the downside, we will be seeing the leading groups first showing the initial signs, and semiconductors is one of the two leading groups. The other group is cybersecurity stocks, or cybersecurity. So semiconductor and cyber are two leading groups that you need to look out for a simultaneous move to the downside that will for sure officially indicate that the overall markets will move lower. And that also means, in a general sense, that NASDAQ, the overall tech sector, will also move to the downside. So yes, there is a long overdue pullback due in semiconductors. And that's the reason why you guys should be looking at SMH for potential long-term short to the downside. But again, this is not the swing trade idea that I want to give you guys. Again, make sure you guys stick to the end of this live. So SMH, overall semiconductors, really tight movement, but there are a lot of danger signs right now for semis just based on my SMAs here, right? So let's bring back our technical analysis here. So there is a solid area of support at 219. However, with my SMAs and my daily 10, the red line, and my daily 21, my light blue line for new people who have just joined, these are my SMAs. And again, I only use SMAs. I did not use any other moving averages like EMAs or whatever it's out there. But SMAs is my thing. So if that isn't your thing, completely fine, right? Just understand what I'm saying here. So, hey, whoa, what's up? Welcome, everyone. Wow. There's a lot of people here tonight. Welcome, guys. If you guys aren't subscribed yet as well to the channel, make sure you guys hit that subscribe button down below and make sure you guys hit that notification bell as well. So, semiconductors here with this daily 10 SMA about to converge right on top of this daily 21 SMA, there could be a potential bearish crossover. That's not good. Right, because if we do see a bearish crossover, then at that point, or by that point, the candlesticks should be closing below both of the daily 10 and the daily 21 SMAs. And if you guys have been with us for a long time, you guys should know what that means. The short-term momentum for semis are now clearly changing from a bullish momentum to a bearish momentum in the short to mid-term. And so I can clearly see a potential move to the downside for semis, the overall semiconductors, including the leading semiconductors, tickers like AMD, NVIDIA, or even ARM, which I'm going to talk about today as well. So, SMH definitely can close this gap from last Wednesday and Thursday and eventually break below 219 and break below both of my daily 10 and daily 21 SMAs, and eventually come all the way down, create a new lower low once it breaks below this first pivot low point at $212.82, and eventually come all the way back down to retest this daily 50 SMA, which is currently sitting at, pretty interestingly, at this daily level of 206. So tomorrow, at some point, I would expect to see the daily 50 SMA, which has been catching up slowly to the price. It should reach and converge with this 206 daily support level. And if you guys remember from my previous live streams, or even just ever since we've been doing these live streams, or even the first few videos that were on this channel, the daily 50 SMA, whenever we see it catching up to the price, whenever we see the price action itself, the trend itself slowing down, and we start to consolidate up here, that allows the daily 50 SMA to slowly creep up and also warn us of the fact that if the price comes back down to retest the daily 50 SMA, that isn't a good look as well. Because again, the long-term SMAs, my 50 and 200, the prices should always be moving away from both of my long-term 50 and 200 SMAs, right? It should always be moving away. So if we get too close and if we retest it, that is that is another warning sign that semiconductors are becoming very, very weak. There's a change in tide here, all right, with the leading groups. So with that in mind now, if you take a look at ARM today, so ARM was a swing trade idea in the CFO Swing and Watch newsletter. It was sent out on Sunday night. It's a very, very comprehensive newsletter that is sent out every single Sunday night, along with a technical analysis video, which unfortunately I wasn't able to provide to the members on Sunday because of my audio issues and my mic issues. So I had both hardware and software issues, but hopefully everything is corrected now and everything will be fine for next week. But yes, this newsletter is very, very essential if you guys don't have the time to do any of the research technically or fundamentally, but overall technically. And if you guys are, just really looking for something to really aid you in your own trading journey. So if you guys are interested in that, make sure you guys DM me on Instagram at ChartsFocus1. All right. So ARM here, it's unfortunate that we weren't able to see a nice long position on this one because it looked really good. This is clearly an A+ chart pattern here with a very nice bull flag. Right. We have that initial impulse run up creating the flagpole, and then this nice wedge consolidation that's a part of that flagpole creating together a bull flag. So this was really, really looking good. It was getting really tight last Thursday and last Friday with a very nice inside candlestick and a doji candlestick at that on Friday. But today we had a huge sell-off on ARM. It's down almost negative 7.50%, right? That's a huge move. So ARM itself, it's past its IPO lockup period, right? That's expired, and I believe that expired in March 12th, if I remember. So it seems like, based on rumors on Twitter that I saw, SoftBank, which owns 90% of this company, are looking to shave off some of their ownership into this name after being made public and after the lockup period expiration. So it makes sense, right? I mean, that's fine, but it will most likely invalidate this bull flag chart pattern, and most likely we can head back down, break below this ascending support trend line that makes up this bull flag, and then come all the way down to 116.50, which is the next big support level on ARM. So there is a chance that we can find a nice short entry for my members tomorrow if you're able to see a nice green to red entry point, or simply a rejection at one of our daily 10 or daily 21 SMAs. But I'm personally betting on the daily 10 SMA as the rejection point for an entry to the short side. So again, ARM, for any of the members who are watching now, there is an opportunity to short this one and move and see the price move back down to around 116.50, or you guys can stay even more patient and see the official retest of the daily 50 SMA, which is almost caught up to this 116.50 daily support level. Oh, what's up, guys? Oh, 9 likes. Awesome. Let's get to 12. How about that? There's a lot of people in here, so welcome, guys. Welcome. We're seeing a lot more people subscribing to this channel as well in the past few weeks. So welcome to all newcomers. Welcome, guys. Hello, hello. So for anyone who's just joining right now, as I've always said before, make sure you guys watch the recording. Right? It's essential that you guys watch the recording because I always talk about the most important things in the very beginning of every single live. All right, so ARM here, it's unfortunate that it did not work out to the long side, but hey, there is still a lot of room left to move to the downside, and there's still a lot of room for consolidation. So not all hope is lost, but make sure you guys understand that ARM has a nice range, a very wide price range between 116.50 all the way up to 150, right? This red line here, this horizontal red resistance level. So make sure you guys understand that for ARM. All right, and then next, I want to look at commodities, right? So that's it for semis. So let's take a look at energy first, right? So XLE clearly leading so far in relative strength, right? In relative strength. And so far, XLE on the weekly time frame, it looks, I mean, I don't think I have to say anything here, right? I mean, this is clearly itching for a very large breakout, right? I mean, if you take a look at this entire chart since 1999, right? This is a huge bull flag. So if energy decides to have a nice breakout, a nice blue sky breakout into the previous all-time highs and eventually make a new all-time high, if we do see that breakout, then energy will be leading, right? So overall commodities will be leading as they have been. If you guys have been following us, we had a very good swing trade on VLO, the ticker symbol VLO, Valero Energy, right? And this looks really similar to that single individual ticker. So the entire energy sector has been seeing some very good inflow, and has been holding up ever since 2022, mid 2022, when this entire consolidation was forming, right? Or this entire consolidation phase. So let me just expand this trend line, and let's take this out now. Okay, this is also from last year, so we can take that out. Let's take all of this out. So we have a clear level of resistance at 93.50, and that's also where we rejected this week. So if we find some very tight consolidation under 93.50, again, for the fourth time, all right? Because again, we've had retest number 1 here, number 2, all right? Number 3 right here, and then number 4 this week. So this is pretty impressive on XLE, this entire sector. Now, what are the implications of energy running to the upside? Well, we have inflation worries. Excuse me, guys. Inflation worries. And so if you guys haven't noticed, this gasoline prices have been increasing nationwide. Right, so crude oil prices have been moving sharply higher for the last couple of weeks. I would say around almost 3 weeks now. And so, it'll be interesting to see where the Federal Reserve is going to be worried on, especially when it comes to energy, very volatile energy prices, since food prices have also been volatile, but at the same time, food has been slightly going down while energy has been going up. So I believe that's the data. If I've interpreted that wrong, my apologies. Or if my memory is not proving me nicely here. But overall, food and energy prices tend to be very volatile. Overall, again, just this is technical, from a technical standpoint, it looks really good. Very, very good. So overall, commodities should be on your watch list, right? So overall, any type of commodity, or especially leading commodities that we have, the private members and newsletter readers, it should be interesting the next couple of months if we do see the markets rolling back, because we should be seeing the markets becoming defensive, and that's exactly what we're seeing in this very short week, in the last week for quarter 1 of this year. So, with energy here, just absolutely just, looking for new highs. I would say, just put it simply, right? To put it simply, I think you guys should watch out for energy and at least the next 2 to 3 weeks, because if we do decide to tightly consolidate right underneath 93.50, it would take at least minimum 2 to 3 weeks, right? And before that, there is still a possibility that we can see a very quick rejection like we saw in the past 2 times or even the past 3 times here in the first pivot at 93.50. So that's the reason why I really want to see really good consolidation to the point where we are able to see the weekly 10 SMA right here, okay, this red line, catching up to the price. And once that happens, then, and if and only then, we can see a nice blue sky breakout back into the previous all-time high, sitting at the triple-digit numbers of $100 and plus, and then eventually to new all-time highs. Okay, so commodities should definitely be on your watch list or watch lists. Okay, so now lastly, for our main 3 objectives, let's take a look at the overall market. So S&P 500 definitely seeing some very, very large warning signs. All right, so just the volume in itself. Let's take a look at the volume bars. We've been seeing more red selling bars, volume bars compared to green bars the last couple of trading days, right? Especially for the last half, the latter half of March, we've been seeing more and more big red selling volume bars. All right, hopefully you guys got that. I said it very, very slowly. And yes, we have made new all-time highs between these very large red volume selling bars. However, that doesn't mean much when we've made these nice bounces with very, very low buying volume. These volume, these volume bars are essentially volume bars that you would expect to see on a dead cat bounce. But instead, this very low volume contributed to a new all-time high price print on the S&P 500. So that, again, was kind of a warning sign to me when I first saw this. And then subsequently after that, we haven't had a single green volume buying bar, right, at all. So for the past 4 trading days, including today, we've been seeing very small but very nice pops in selling volume bars. And this continuously gives me warning signs, right? Now, obviously, my SMAs can be contradictory as well to my selling volume bars here. Why? Because the price is still staying on top of the daily 10 and the daily 21 SMAs. And I have yet to see the daily 10 curling down, just like what we saw on SMH, right, on the daily time frame. And we're about to see a convergence point on these two. So I'm definitely going to be watching this tomorrow for a potential short. So SPY has not seen that yet, right? We're just seeing the daily 10 SMA catching up. Very, very simple. It's literally about to converge right at that 517-ish whole number support level. And the daily 21 SMA is still doing its thing, just slowly catching up to the price as well. And I have yet to see both of these curling down. I haven't even seen the daily 10 here. Clearly, we have not seen it flatlining yet at all either. So once I'm able to see the daily 10 and the daily 21 SMAs flatlining, right, and then beginning to curl, especially on the daily 10, that's when I'll be convinced that we are definitely heading into some weakness for the first day and first week of quarter 2. Okay, quarter dos, right? So, it's going to be pretty interesting to see what we do tomorrow, because the S&P 500 definitely created a nice bearish engulfing candlestick with volume to back that up as well, right? Nice price range day where we had a nice sell-off in the latter half of today, or around the last 2 hours, I would say. And it was accompanied by bigger volume compared to yesterday's volume. So that is not looking too good. All right. So that's kind of my overall generalized thoughts on what we should be expecting heading into quarter 2 and as we head into the end of quarter 1 on Thursday. All right, and I'll be doing a lot more research and putting more data, a lot more data into April's big overall market trends newsletter, right? If you guys have not subscribed into that free monthly newsletter, make sure you guys let me know in Instagram, through Instagram, if you guys want to do that, or just let me know in the live chat room. That should be to your side or at the bottom if you guys are watching on your phone or on your laptops. All right, wherever it is, the live chat, make sure you guys let me know. Okay, so if you guys want to opt into that free monthly market trends newsletter, make sure you guys let me know and I'll add you guys. All right, so there are hundreds of people that are subscribed to that free monthly newsletter. So if you guys want to become a part of that large group, make sure you guys let me know. All right, make sure you guys become a market trends reader. So you know, for the overall S&P 500, it's, you know, I'm still keeping my floor here of a retest at 477.50 because again, even at highs here, right, it's still not too crazy of a pullback, right? So it's still a textbook pullback from the current all-time highs. All right, so if you guys haven't noticed, my percentages here for a move down have been rising up, right, increasing because, well, the underlying share price of the S&P 500 has been moving up as well. But overall, the percentage between the current all-time highs all the way back down to this 477.50 floor is still within that 5 to 10% textbook pullback percentage range. So, you know, I'm not going to move up my floor here. I'm just going to keep it. You know, obviously there's a lot of hurdles for sellers to break through, especially my daily support levels at 5010, or excuse me, 5010, 509 or 510 if you guys want to use either one of those whole number levels, doesn't really matter. I would say just round up to 510 based on what you guys see here, right? 509.80, just round that up. And 503, which is kind of interesting here because it's also where the daily 50 SMA is about to catch up and converge on top of it as well. So in the next couple of days, the daily 50, which is also catching up to the daily candlesticks here, to the price, just like what I've discussed with SMH, right? That is going to be a warning sign, right? Especially if we do see a retest at the daily 50 SMA. Because again, if we do see a daily 50 SMA retest for the first time since October and November lows, I mean, obviously the price would have moved down, right? I mean, I don't think I need to really describe that to you guys, right? I mean, the price would have moved down if we are seeing a retest on the daily 50 SMA, right? So the action itself of retesting the daily 50 SMA to come back down to retest this major long-term SMA is a warning sign, an official long-term warning sign. So you know, I would have really liked to see the price around 503 by now for an official retest of the daily 50 SMA converging on top of this 503 daily support level, but that hasn't happened. So at the very least, I would want to see a retest of the daily 50 SMA somewhere around that 510 daily support level, okay? And that would also mean that we would need to break below the daily 10 and the daily 21 SMAs on the S&P 500, which again, if I go all the way back to my first analysis on the S&P 500 for the SMAs, I have yet to see any type of a curling down action on my SMAs. So again, I have yet to see still a flatlining of my daily 10 and daily 21 SMAs as well. So if you guys are wondering why I'm looking for a flatline, well, that usually leads into either a curl up higher or a curl up down. So you know, that's kind of my reasons why I am looking initially first for a flatlining action on my daily 10 and my daily 21 SMAs, but most importantly on my daily 10. Okay. All right. So to end this live stream, I want to give you guys my free swing trade idea, and this is from the CFO Swing Watch newsletter from this week. Okay, so here it is, FCX. So I've already talked about this before, but FCX, a leading copper stock and one of the most liquid copper stocks. If you guys want to take a look at the overall condition of copper prices itself, just take a look at COPPER, literally spell out copper, all right? So copper here, all right, has had a very constructive pullback after breaking over this 3.95 resistance level. So there is a possibility that we can see a $3.95 retest in the next couple of days, maybe even next week, or maybe even next week. And if we do see a retest and a bounce, right, very quick bounce, we want to see a nice re-entry back into copper-related stocks like FCX, okay? Or if you guys want to take a look at the other one that I look at is SCCO, Southern Copper Corp. So this one's also a very, very nice big mover once it gets going. So there's another one to be looking at, but I really like how FCX has been shaping up, and also it's one of our CFO Swing Watch newsletter ideas for this week. So, well, not really for this week, and I've detailed why. And so if you guys want to know the reasons why this is not just a swing trade idea for this week, make sure you guys become a member. All right, you guys have a lot of opportunities to become a member this week. All right, so if you guys are interested in that, please let me know by DMing me on Instagram. All right, so what is this swing trade idea? Well, first of all, if you take a look on the weekly time frame, I've also really just hammered into you guys about this crazy looking, well, crazy in a good way, looking technical chart pattern. This very, very huge multi-year macro wedge chart pattern. So this is looking pretty good so far with this nice breakout to the upside, because if you guys didn't know, a wedge chart pattern is a neutral chart pattern, which allows an opportunity to see a breakout to the upside or to the downside. Hey, what's up, Sparky? All good, man, all good. Oh, I see a few more people coming in as well. Welcome, guys. Welcome, welcome. You guys have missed a lot, but no worries. Watch the recording, all right? It will be posted right away after this live stream is over, so make sure you guys watch the recording from the beginning to the end, right? So FCX, overall, it looks really interesting because if we're able to currently come back down and retest that breakout level sitting at 43, this weekly resistance level where we've been seeing buyers struggling in the past, right here, over here, and most recently over here back in December of last year. And if we're able to turn this into a new strong level of support at 43, we have a huge buying opportunity on FCX. Again, if you guys have not played FCX with us on this initial breakout, which our members did, right? Our private readers and members. So again, if you guys want to become a Charts Focus One member, make sure you guys DM me at Charts Focus One on Instagram, and I have a huge surprise waiting for you if you guys take the time out of your day to do that, right? Just to simply message me, right? So FCX, that's essentially what we're waiting for here, right? 43 bucks, right? This retest of this previous old resistance level, and if we do bounce on top of it, that will turn into a massive weekly and monthly new support level that can help the prices make a nice pivot low point, or basically a higher low point compared to this low point here on this weekly candlestick, and we can nicely see a run back up higher, right? So this is exactly what I want to see. So eventually, based on this price path structure that I've drawn here, we need to see a retest of 43, right? And eventually bounce over 43, continue to go back up higher, break over this weekly 46.50 resistance level, which we have been, again, really just retesting it and rejecting off of it twice, including this week and last week. So we're really adhering to this weekly 46.50 level, which makes it very, very significant. And so if we're able to break over it, then we are officially taking out all the sellers that are still staying at this weekly level of 46.50, this weekly resistance level. And so that should be pretty easy for bulls or buyers from that point forward. It should be a very easy ride back to the previous highs at $52, right? So this is where we have our first high point, our pivot high point that created this massive macro multi-year wedge chart pattern on FCX copper. So again, I have also previously gone over FCX and why overall copper looks really good compared to uranium, which had a similar chart pattern. So just a quick summary here, right? Very, very similar chart pattern, right? A nice macro multi-year wedge, all right? Completed the chart pattern and then had a very nice breakout. But take a look at right here. After that initial breakout from this macro multi-year wedge, what did we get? A nice pullback and eventually a nice retest of this previous initial resistance trend line, right? And then once we bounced off of it, it was history after that, right? I mean, it just absolutely exploded to the upside, taking out every single short seller that were sitting at these major weekly resistance levels, one at a time, right? And eventually created a new higher high compared to the first pivot high point that was made here for uranium in November of 2021. So if we translate everything that I just described right over here, right, for this name or for uranium overall, it looks really similar. All right, it looks very, very similar. All right, so obviously the only single difference is that I'm looking for a retest of 43. This is a major resistance level at the weekly time frame. So I want to see a retest and bounce away from this 43 previous resistance level. But there is still that slight possibility that if copper prices, overall copper prices remain weak, that FCS can come back down and retest this macro descending resistance trendline, just like uranium, right? Just like uranium did, okay? Like right over here, specifically right on this weekly candlestick, right? And so there is that slight possibility of that occurring. So make sure you guys leave room for that dot. All right, so for now, I will keep this FCX as a potential retest at 43 rather than this descending resistance trendline retest. Okay? All right, so that's essentially what I'm going to be giving you guys for FCX. I showed you guys 2 out of the 3 trade ideas featured on this week's CFO Swing Watch newsletter. So make sure you guys go back to the recording to really just, again, go through the information that I've told you guys on everything that I just covered, the 3 objectives that I covered in this live, and make sure you guys remember it and make sure you guys apply it when the time is right. All right, so again, make sure you guys leave a thumbs up down below if you guys are always enjoying the information that I provide you guys, because not only is it important information and valuable information, it's applicable information, right? That's the most important part of these lives and what I do. I want to provide not only insightful, valuable, important information, but I want to provide very, very applicable information. Does that make sense, guys? All right, so FCX, this is a potential swing trade idea that you guys should have on your watch list. And overall, just the overall commodities, right? XLE is a major commodity sector that you guys should be looking at. All right, I went over this a couple of minutes ago as well, around 10 minutes ago. So make sure you guys watch the recording I highly, highly recommend you guys that if you guys are arriving late. Alright, so that is it for tonight, guys. Thank you guys so much for sticking around for 40 minutes. That's amazing. 40 plus minutes at this point. And thank you guys for 9 likes. Let's see if we can get to 10 likes after this live stream is over. But again, hopefully you guys have recognized this slight change and a better quality audio sound for the live, and also the overall screen as well, the quality. So if you guys have noticed that, let me know in the live chat or the comments down below. But I have worked really hard to make sure my software and hardware issues for audio have been fixed, and also I have enhanced the quality of the audio. So if you guys have really just noticed that, let me know by liking this live stream down below or by leaving a comment. Alright, so that is it, guys. I'll see you guys on Thursday of this week at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time as per usual. And again, if you guys have found this live stream useful and informative, make sure you guys apply it when the time comes. That's the most important thing. Alright, have a great rest of your night and good luck tomorrow. Thank you so much for watching.